Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video I wanted to show you how I approached two different names into earnings and some very basic strategies that you can use around that depending on how you're feeling about the next underlying move. Now, when I come in and take a look at Netflix, and I surely hope nobody was looking at it this way, but in my mind, if you're going to look at this and call something like this a potential head and shoulders, you will save yourself a wealth of money to try and play it to the short side once it breaks. I'm just going to try and show an arrow here, but it's more to say, don't look to a pattern like this and say, oh, it's a head and shoulders top. If it is, let it prove it to you first, and then you'll have plenty of room to play it back to the downside. Part of what helps me recognize that that is in no way, shape, or form that type of pattern is how it remains so resilient against that 10-period simple moving average. So when it holds that zone, closes back up above it last week, that tends to have me focusing on it to the long side. Plus, I was relatively impressed by the ascent that we saw just prior to the report, so I looked at structuring it in a very basic way, just selling some of the in-the-money put options. So something like this. Yes, it is in the money, and sometimes you'll have a higher chance of getting assigned, but I don't mind doing it in binary situations. It's not like I was going to have to sit here on these in-the-money put options for the next 4 days. My thought was, if I can get a directional move, then great, we'll peel them off during the next session, and it's a way to limit risk while still participating to the long side. It was a little ironic if you come down and look at, they're actually not showing my canceled orders, but I was also trying to put a butterfly up there at 175 that they didn't quite get me on, but that's okay. The puts will be about where I would like for them to be tomorrow. The wild card for me will be Goldman Sachs, because I look at this and think, okay, a lot of the earnings reports and financials that came out last week all beat their estimates, but you didn't really see stellar performance from them afterwards. My thought around that was doing something very similar to Goldman's, where we're centering ourselves around 230. So you set up the iron fly around 230 for a $5.40 credit. That gives you a $5.40 leeway in both directions. And I was looking at it just basically saying that I think that this is a key inflection point, and I think it has a chance of staying inside that range. Now, of course, if I'm wrong tomorrow and Goldman Sachs explodes through those short strikes, I will take a loss on that trade, look to see if anything else is setting up and offering itself for a setup, but overall I would think that would help propel the markets as a whole higher and then help cushion the rest of my overall portfolio. So that's kind of how I'm trying to think from one neutral, one bullish perspective, and how it will have an impact on my overall positions, and hopefully you guys find that helpful. One other thing I wanted to make sure you guys were aware of, depending on what time you're watching this video, tonight, Monday the 17th at 7 p.m. Central Time, John will be doing a free webinar on how he's been incorporating one of these option backtesting tools with his work. It's something that I have found to be extremely helpful into and around earnings as well, and this will give you some time with him, the creator of the software, and I think it's something that you'll find really beneficial as you work to extract more profits from these earnings trades and just taking better spread setups in general. So if that's something you're interested in, that is tonight at 7 p.m. Central, and I hope to see you guys there.